Nvidia's financing can look less like straightforward growth capital and more like a circular firing squad, because the money often seems to loop through the same ecosystem, boosting demand, valuation, and dependence at the same time. Here's the basic idea. Nvidia sells the picks and shovels of the AI boom, chips, systems, and software that everyone wants. But in some cases, it also helps finance the very customers buying those products, directly or indirectly, through partnerships, strategic investments, revenue-sharing arrangements, or vendor financing structures. That means capital may leave Nvidia's orbit and then come back as orders for Nvidia hardware. On paper, that can look like explosive demand. In practice, it can also look like the company is helping create the demand it later reports. Why does that matter? Because when a supplier finances its customers, the line between organic demand and engineered demand gets blurry. If an AI startup or cloud provider uses Nvidia-linked capital to buy Nvidia chips, the transaction may support near-term revenue, but it can also increase the buyer's leverage and the seller's exposure. If the customer struggles, the supplier can be left with weaker collections, lower credit quality, or a partner that needs more support just to keep buying. That's where the circular part comes in. Nvidia's success depends on customers spending heavily on AI infrastructure. Those customers, in turn, often need financing, partnerships, and investor confidence to keep spending. Nvidia's capital can help sustain that cycle. But if too much of the growth is funded by the same network of suppliers, investors, and customers, the system can start to resemble a closed loop rather than a broad, self-sustaining market. And the firing squad analogy, that points to the risk that everyone in the chain is both supporting and exposing everyone else. If AI demand slows, if chip purchases are financed too aggressively, or if hyperscalers and startups overbuild capacity, then losses can spread through the whole ecosystem. The same relationships that amplify growth can also amplify pain. So the concern isn't that Nvidia is doing something illegal or unusual. It's that the financing structure may inflate the appearance of unstoppable demand while concentrating risk in a tight circle of dependent players. In a boom, that looks brilliant. In a downturn, it can look like the whole squad is aiming at itself. If you've been enjoying the video, do me a quick favor, hit like and subscribe. It's free, it takes just a second, and it helps the channel more than you might think. A like tells the algorithm this is worth sharing, which means more people get to see the content you're already watching. And subscribing means you won't miss the next upload, the next tip, the next story, or the next big moment when it drops. Honestly, it's one of the easiest ways to support a creator. No payment, no commitment, no catch. Just a simple click that says, yeah, keep making this stuff. And if you really want to help even more, turn on notifications so you're the first to know when a new video goes live. That way, you never have to go searching for it later. So if you're still here and you're enjoying the content, go ahead and join the community. Like the video, subscribe to the channel, and let's keep this thing growing together. It's free, it's fast, and it makes a huge difference.